Hey, everybody, I wanted to talk to you today about using bank statements to qualify for a loan to buy a home versus some of your more traditional income levels. Now, let's eliminate that for just a second. If you're a wage earner and you have a W-2, or you're self-employed and you show a lot of income on your tax returns, those type of income documentations to obtain a loan, yes, they're easy, they're vanilla. That's typically where you're going to see some of the most advantageous interest rates. However, there's a lot of self-employed business owners, me being one of them, that gets to take advantage of IRS tax deductions. How much we make in our business may not be how much we have to pay taxes on it. Well, a lot of my self-employed business owners, commission salespeople, a lot of them don't necessarily have to pay taxes on the true amount of money that they make. And when it comes time to buying a home, what they pay taxes on may not be enough to help qualify to buy a home. How else can a self-employed or maybe a commission salesperson buy a home if they don't show enough income on their tax returns? Well, we can use personal bank statements to do that. Let me tell you what that looks like. Most of my self-employed business owners or commission salespeople deposit a lot of money into their personal account. They might get a commission check, they might get a bonus, and they deposit it into their personal account. Well, we have some lenders that will look at your personal bank statements for the last 12 months. Now, don't worry, they're not going to look at how much money you spend at Starbucks. They're not going to look if you spend a little money on gambling online. They're not going to look at how much money you spend on your dry cleaner or on Venmo for pizza. They're specifically going to look for your deposits and how much money are you depositing from your commission job or maybe your self-employment job. And we'll look at 12 months of your personal bank statements and we will look at how much money you deposit. And we get to use that as your income. So if you deposit $10,000 a month, every single month for a year, you now have upwards of $120,000 in income to use to try and qualify for a home. Now, I promise you, if you're a commission salesperson or self-employed, if your 1099 is $120,000 a year, you're probably writing off $40,000 to $60,000 in expenses and only paying tax on maybe $50,000 or $60,000 of that, as you should. But a bank statement loan should still allow you to qualify to buy the home. It's ideal for anybody who's a commission salesperson. It's ideal for anyone who's self-employed who may not have a separate business corporate account or a checking account. So anybody who's depositing money into their personal bank statements that comes from income, it's ideal for. By the way, if you have a side hustle on Etsy, if you have an Amazon storefront, if you have a second income that is coming from some of those places, we can actually add that with a W-2 that you may have to help increase your income. So it doesn't have to be even your full-time job. It could be one of your side hustles. Let me talk about some of the quick advantages of this. It's easy to qualify for because they just look at how much money you're depositing, and it's really simple to go through that calculation. Now, something that's really important if you're looking to buy a home, you have to get approved before you go shopping for a home, a full loan approval. You don't want to take a chance on this type of loan to go make an offer to buy something if you haven't been fully underwritten. And that's something that we can help with. We're going to collect 12 months of your personal bank statements. It takes us less than 24 hours to come up with a calculation and issue an actual approval that's going to help give you buying power. There's only one drawback to this, but I want to tell you why you should still do it. You're going to pay a little bit higher interest rate with a bank statement loan versus a traditional loan. Why should you still pay it? I'm going to tell you a really quick story. I had a client who made a lot of money, but he didn't pay a lot of taxes. And at the time, interest rates were about 5.5%. And he did a bank statement loan, and his interest rate was 6%. And he says, Chris, I want the lower rate. And I said, okay, you have to pay an extra $100,000 a year in income taxes to get the lower rate. And he said, why do I have to do that? I said, because your income is not sufficient to qualify for the loan, but your bank statements are. If you want to pay an extra $100,000 a year in income taxes, I'll get you the lower rate at 5.5%. Or take a little bit higher interest rate, which was the equivalent of about $7,000 a year, and use your bank statements. You see, psychologically, don't let the interest rate impact your decision. Let the math impact your decision. If we're using your personal bank statements to qualify to buy a house, that means that you're taking advantage of opportunities that the IRS affords you. You want to take as many deductions as you can, remove the psychological idea of the lowest interest rate, and let's just look at math. And I can help you do a complete analysis on that to show you why you probably should not amend your tax returns. If you're self-employed, or if you're 1099 or all commission, and you're depositing your income into a personal bank account, and you're not sure how much home you can qualify for, reach out to me anytime. I'd love to help. Thanks.